Right. So, good evening again, everyone. Good evening, Uday sir and Isuru sir, and welcome you all to today's lecture. Right. So, today we have two important things to do. The first important thing is we are going to discuss our practice question on individual taxation. Right? Individual taxation, one question we are going to discuss. So, we have already uploaded this question to LMS, and this is the question we're gonna do. And the second one, after discussing this question, I'm going to tell you what are the things you need to do for your individual assignment. That one also I have shared you the information and available in the LMS. We will discuss the individual assignment as well. Right. So this is the question, as you can see. Hopefully you can see my screen. Can
Screen
somebody?
visible. Screen
Yes.
visible.
Okay. Thank you, sir. Right. So, before going for the answer, before discussing the answer, we'll go through the question first. And one important thing I usually do when I do a question like this, before reading out the full question, I usually go for the question what is required, right? That would be easy for you to understand the exact requirement. So we'll see the requirement first. There are two requirements. First one, calculate the income tax payable by the partnership Zillion Associates for the year of assessment 2023-24. So as you can see, you have discussed partnership taxation. We have to calculate income tax payable by the partnership. And then the second requirement is calculate the balance income tax liability of Mr. Avantha for the year of assessment 2023-24. So that means individual taxation. So there are two requirements. We have to do partnership taxation and individual tax computation for Mr. Avantha. We'll see the relationship. You will understand that when you read the question. Right. So it says one important thing, you are required to show all workings as well. So when you are going to do a similar question in the exam as well, you need to show all those workings. We'll see what are the workings. Right. So I'm going to the top of the question. Right. Mr. Avantha, a resident in Sri Lanka, works for Smart IT PSC. He has provided the following information to calculate his income tax liability for year of assessment 2023-24. So he's a resident and he is working in this company, and the details is provided. First point, salaries and allowances for year of assessment 2023-24. So these figures have been given for 1 year of assessment, not monthly. So you need to pick these important points. Sometimes in questions, they can give you monthly figures, monthly salary, everything. But here, salary and everything for the whole year of assessment. So basic salary, it's given in thousands, entertainment allowance, telephone allowance, and there's a separate note, refer number 3, and then EPF 8%. So as you can see, 3,240.30, those figures, they have deducted EPF 8%. And then payment for the house, 120, they have deducted from the salary, and net salary is 2,910. Okay, the second point, employer's contribution to employees provident fund, that is EPF, and employees trust fund, that is ETF, calculated on basic salary. Right. So we have been given the details. This EPF and ETF has been calculated on basic salary. So what is the basic salary? 3,000. 12% and 3% respectively. That information given. And the telephone expenses of Mr. Avantha for the year of assessment 2023-24 is 40,000, of which 30,000 rupees was paid by the company. Right, the expense is 40,000. Out of 40,000 telephone expense, 30,000 was paid by the company. right? Balance 10% has been bared by Mr. Avantha. And then bonus received. Number 4. Bonus received, there are 2 points. Out of the profit of the year 2022-23, that means previous year, right? 140,000 rupees. But it says bonus has been received in April 2023, right? So what is our year of assessment? Our year of assessment is 2023 to 24. That means from 1st April 2023 to 31st March 2024, right? So you have to decide this bonus, 140,000 bonus has been received in April 2023. So you need to remember now, when we are adjusting bonuses, what is the basis, right? And then out of the profit, the second bonus, out of the profit of the year 2023 to 24, that means this year, 350,000, that is the bonus amount, but received in April 2024, right? So there are 2 days, 2 bonuses. We have to consider which bonus we are taking. And then number 5, Mr. Avantha has been provided 1500cc motor car for both official and private use with unlimited fuel by the company, right? Vehicle benefit. Under non-cash benefits, we have discussed how to adjust how to take vehicle benefits for taxation. So you have to adjust it. And then number 6, Mr. Avantha has incurred a maintenance expense of 150,000 on 15 March 2023 for his personal vehicle. The company has reimbursed 50% of this maintenance expense, that means 75,000, on 15 April 2023. Even though this expense has been incurred on March 15, company has reimbursed half of it, 50% of it on April 15th. This vehicle is owned by Mr. Avantha and it has been rented out to a cab service company for a monthly rent of 200,000 for the whole year of assessment 2023-24. So as you can see, there are 2 points in this number 6 part, right? One is the maintenance expense, 50% of it has been reimbursed by the company. So we have to adjust it accordingly. It's a benefit. And again, it says Mr. Avantha has given this vehicle on rent to this cab service company. So we have to see that benefit as well. And then the company has provided a residence to Mr. Avantha. The residence is located in Colombo 7 rated area, which is newly constructed and fully furnished. So this is residence benefit coming under non-cash benefits. And it says Avantha paid 10,000 monthly to the company for this benefit. Next one, the company has allotted 2,000 shares to Mr. Avantha under an employee share option scheme on 1st January 2023. So we have discussed how to adjust these share allotment benefits as well. And in this regard, Mr. Avantha paid 50 rupees per share at the allotment. Avantha has paid 50 rupees per share. But the market price of share at the time of allotment was 75 rupees. And it says he sold all these shares at 90 rupees per share on 20th March 2024. So we'll see how to adjust that. And then number 9, air ticket cost of 650,000 has been reimbursed by the company in March 2024 on foreign visits made by Mr. Avantha to meet a business partner of the company in Australia. So it's an air ticket, reimbursement of air tickets, but you need to see the purpose. We'll see how to adjust that as well. And then during March 2024, Mr. Avantha's wife was hospitalized for 2 weeks for a surgery. The hospital bill was 145,000 and the company settled 100,000. So hospital bills out of 145, company has settled 100,000. Right. Number 11. In addition to his employment, now up to this point, did you see any information related to a partnership? No, right? It was all about his employment, right? Avanti is working in the Smart IT Private Limited. So in that company, what are the benefits, employment benefits and other benefits, maybe rent and other benefits he has received. But here, from this point onwards, we are going to talk about this partnership as well. That's why I was about to read the full question before starting the sum, because it's not a completely employment income question. You have this partnership as well. In addition to his employment, Mr. Avanta is a partner of Zillion Associates, which provides consultancy services. So Mr. Avanta is a partner now. The partnership shares profits and losses among the three partners. Now there are three partners, Mr. Avanta, Mr. Nihal and Mr. Patirana, in the ratio of 2 to 1 to 1 respectively. Following information relates to this partnership for the year of assessment 2023-24. Right. Now you have been given this profit or loss appropriation account, right? Here you can see, now this is bit different to what you have discussed in the partnership lecture. So be careful when we are reading. You have been given the net profit. Net profit is 3,000, given in thousands, so 3,000. And salaries to partners, we have been given the salaries to partners. There are three partners, Avanta, Nihal and Patirana, and the numbers have been given, altogether 840. So as you can see, this 840 has been deducted from 3,000. That means 3,000 rupees net profit means after deducting salary or before deducting salary. What do you think? Read the latter part as well. And then share of profits. So after getting the salaries, they are sharing the profits on this ratio 2 to 1 to 1. Share of profits, there are three partners. As you can see, 1,080, 540, 540. As you can, if you just compute and see, this is 2 to 1 to 1. And that is 2,160. And you can see 0. How comes that 0 comes? Like 3,000 net profit, and out of 3,000 net profit, 840 salary has been deducted, and then the balance is share of profit 2,160 that has been divided between these three partners. So there is no balance. Now my question is this 3,000 net profit, as you can see, after deducting salary or before deducting salary?
Before deducting salary.
Exactly. Before deducting salaries. So salaries are not deducted in 3,000 rupees. That you need to remember because it's important when we are answering the question. Right. Now additional information provided. It's still under point number 11. So it's all about the partnership. Additional information. The above net profit includes above net profit. That means 3,000 net profit, a rent income of 700,000 of the partnership business. Okay, a rent income related to partnership business that is included in this 3,000 net profit. And then it says depreciation expense and the capital allowance for the year are computed as 550,000 and 650,000 respectively. So now you know how to adjust capital allowance and depreciation. And then partnership has paid the relevant tax amounts to the government calculated on the divisible profit during the year. So whatever the profit they have to pay from the partnership as partnership tax, they have paid. Right. And then the next point, 12, Mr. Avanta has rented his own house and received a rental income of 840,000 for the year of assessment 2023-24. And it says, Mr. Avanta has not given consent to deduct AIT. right? So advance income tax, Mr. Avant has not given consent to deduct AIT. So this 840,000 means gross or net? This 840,000 is gross or net rent? Yes, gross rent. So during the year, he has incurred 200,000 for repair work of this house. We have to remember that point as well. For house repairs, he has incurred some amount. And then the next point, the interest received by Mr. Avantha to his bank account for the year of assessment 2023-24 is rupees 78,960. That is net of AIT. So that's given, right? After deducting AIT, he has received this interest. He has given the consent to his bank to deduct AIT at the rate of 6%. So that information given. So it is clearly net interest. And then the next point, Mr. Avantha has donated 150,000 rupees in cash to Ministry of Education during the year. So you need to know these donations come under qualifying payments. So we'll see how to adjust them. And of course, he has also donated 80,000 rupees and medicines of 20,000 to an approved charity. Again, donations to an approved charity. You can see in cash 80,000 and medicines worth of 20,000. So we need to see how to adjust qualifying payments. And the last point it says, income tax payment of Mr. Avantha on self-assessment basis during the year 2023-24 was 427,000. So he has paid self-assessment taxes. We will have to consider it under tax credits. Right. So that's the end of the question. Right. As you can see, now you have a good understanding. First part, it talks about the employment income and few other benefits. And then it talks about the partnership. And after that, it talks about some interest income, rent income, qualifying payments, and self-assessment tax. So it's very important to understand the question, read the question first, because some information can be taken from different places. It's not directly given, right? So our first requirement is to calculate the partnership income tax payable, and then we can go for Mr. Avantha's individual income tax computation. So as for the requirement, we'll compute the partnership tax first, right? So you also can work it out with me. That would be the best way to learn this. So I'll be taking Excel sheet. If you have, you also can take, or if you can write it on a paper, that's also fine. Right. Hopefully you can see my Excel sheet as well. Can somebody please confirm? Can you see my Excel sheet now?
Yes, ma'am.
Okay, thank you. Right. So our first part, number 1, it says income tax payable. Always you need to write the topic, income tax payable. What is this partnership name? By the partnership, Jillian Associates, for the year of assessment 2023-24. Right. For my reference, I'll be taking for now 2 columns like this. Right. Okay. Now, when we are computing individual taxation or company taxation or whatever the taxation, we have to think about the four sources of income, right? What are the four sources of income? What are the four sources? You can unmute yourself so you can use the chat box. What are the four sources quickly? Yes. Employment income, employment income, business income, investment income, and other sources. Very good. So now tell me, we are going to do the tax computation for this partnership. Do we have employment income in partnership? Do we have to write that? Employment income? No, we don't have employment income in partnership. So you can directly start with business income, right? Business income. Other three sources we have to use: business income, investment income, other income. Those sources can be there, but no employment income. Business income, right? So coming under business income, so I'll be taking right. So I'll be taking their net profit, given net profit 3,000. So I'll be writing net profit. So even though these numbers have been given in thousands, all other figures, adjustments, most of them are given in rupees. No? So I'll be doing the question in rupees, right? If you want, you can do in thousands as well, no problem. But for my reference, I'll be taking rupees. So 3,000 means 3 million. Right. Okay, so I have taken 3 million net profit. Now, in this 3 million net profit, as you correctly told me, salary is not included, right? Now, as per this question, partners' salaries have been deducted from 3,000. That means if you take 3,000 net profit, that is inclusive of salaries. That means before deducting salaries. So do we have to add back the salaries again in this question? Usually, if you take net profit after deducting salaries, we have to add back salaries. Now here, there's no need to add back the salaries because 3,000 means before deducting the salaries. So there's no adjustment for salaries with this 3,000. Remember that point. Right. Now we have a few other adjustments, right? One adjustment is this one. This 700,000 rupees rent income is included in 3,000. Now, is that correct? Now, we are talking about the business income. Now, it says 700,000 rent income is included in 3,000. That means we have to remove that 700,000 from 3 million, right? 3 million. And we have to consider that rent income as investment income. So that 700,000 comes under investment income. So you can do that adjustment. So how to do all these adjustments? I'll be writing add or a plus and minus or less. You can write whatever you want. So from 3 million, I'm removing this 700,000, that is rent income. Rent income. That is 700,000. I'm using the first column for those adjustments. Right. And then I'll be writing investment income. That is my second source of income. Right. Investment income. rent income. That is 700,000. So you can later also you can write this 700,000, but it's easy. If you deduct 700,000 from 3 million, at the same time you can mention the rent income 700,000 under investment income. Right. And then depreciation expense and the capital allowance given. So the depreciation is 550,000, capital allowance is 650,000. So depreciation. Okay, we have a question. How did you conclude that net profit is calculated without partners' salaries? Because now, as you can see in this table, net profit 3 million is given, 3,000 here. It's given. From 3,000, you have deducted 840. That is the total of partners' salaries, right? 840 as per this table. And then what is the balance? When you deduct 840 from 3,000, balance is 2,160. That was share of the profit, as you can see, right? Now, balance is 0. There's no balance. So you have to understand it from this table itself. 3,000 profit is given. From this 3,000 only, this 840 has been deducted. Balance 2,160, that is the share of profit, right? Is that clear? You understand the fact that salaries have not been deducted from 3,000 from this table. It's given in this table. Okay. Thanks. Right. So depreciation, we were talking about depreciation and capital allowance. Now from this 3,000, this is accounting profit, no? From this 3 million, depreciation has been already deducted. So we have to add back, right? We have to add back depreciation, counting depreciation. What is that amount? 550,000. And instead of depreciation, we have to deduct capital allowance. So you add back depreciation and deduct capital allowance. Capital allowances is 650,000. Right. And then the first point is done, second point done. And then it says partnership has paid relevant taxes. So yes, with that, we don't have to do any adjustment for salaries because 3 million means without deducting salaries, right? If we have the net profit after deducting salaries, then of course you need to add back. But there's no need to adjust that in this sum. So I'll be, yes. So we have considered these 3 points, right? Now you can finish this part, right? Okay, so I'll be taking 550,000 here, and then the total of 700,000 and 650. Just check my answers. Right. So we have, I will take the business income here. Business income. So business income, 3 million plus 550,000 minus 1,350,000. So business income is 2.2 million. If you have any different answers, please let me know. Right. So business income done. And then we have written the investment income as well. After doing the business income also, you can go for investment income. But before I forget it, I have mentioned it. Investment income, 700,000. So we didn't have any other investment income. So I'll be taking this as well. Total of investment income for the second column. Right? 700,000. Okay. So do we have any other income sources in this question? We don't have employment income anyway. we have taken business income, investment income, no other income. So that's the total, right? We can take the total 700,000 and 2.2 million. This equals to the assessable income. We can write it here. This is the assessable income of the partnership. Right. I hope you are clear up to this point. If you have any doubts, you can ask, right? Don't wait till the last moment because it would be easy for you to clarify your concerns now itself. Right. Okay. So we have taken the income sources we have business income, we have investment income, we don't have other income. Total of all these income sources we call assessable income. And then we have deduct what? Qualifying payments, if any. Qualifying payments, if any. So I'll just write it here. Qualifying payments. Do we have any qualifying payments related to the partnership? Can someone please answer? Do we have qualifying payments related to the partnership? Do we have qualifying payments? See, we don't have any qualifying payments related to the partnership. We have qualifying payments in the question. Those are Mr. Avanta's donations, right? Those are coming under individual taxation part. Related to the partnership, partnership has not done any donation. So we don't have qualifying payments for the partnership. So it's really important to understand those things, right? Even though we have qualifying payments in the question, those are not related to partnership. Right. So after taking the qualifying payments, we can take the taxable income next. Taxable income. So it's the same as the assessable income. We don't have any qualifying payments. So this is the taxable income of the partnership. And now we can compute the tax liability. Tax liability after computing the taxable income. Right. So I hope you can remember how to compute the tax liability of a partnership. What are the conditions? There's one particular way, like individual taxation. First, 1 million rupees, right? If we take first 1 million rupees, that is taxed at which ratio? Can I have the answers? First 1 million rupees, what is the ratio? Very good. 0%. 0%. Right. 0%. What is the balance now? What is the balance? You have 1.9 million, right? From 2.9 million, if you deduct 1 million, 1.9 million. That is tax at which rate? Right. 6%. Yes. So you can write here it's 0 and 1.9 million multiplied by 6%, it's 114,000. I hope you get the same answer, right? That is the income tax liability. So I'll be taking it here. Here. So I'll be writing income tax liability. Right, so this is how you calculate the partnership taxation. You took all the sources, you took the assessable income, you deducted qualifying payments, if any, you took the taxable income, and then using these two like ratios, you calculate the income tax liability for the partnership, 114,000. Do you get the same answer? Can you please confirm? Do you get 114,000? Yes, okay. One suggestion, when you are chatting, you can send the answers to the whole chat box, because others are also seeing your answers. I'm getting so many answers. That's really good. But you can openly say it, right? Your answers are correct. Okay. Now, the important part, now we have to distribute this uh, income and the taxes, partnership taxes. For that, I'll be using a format like this, right? Now, how many partners do we have in this partnership? How many partners? Who are the partners? We have Mr. Avantha, Nihal and Patirana. Yes, Avantha, Nihal and Patirana. So, distribution of taxable income. Just write it. Distribution of taxable income. So, we are going to distribute this taxable income among these among these three partners. So, we need 4 columns here. That would be easy for your representation. Like this, right? You also can draw. And I'm writing down their names. Avantha, Nihal and Patirana. Nihal and Patirana. And you can have a total column as well. Avantha, Nihal and Patirana and a total column. Right. Okay. So now when you talk about the partnership, what are the benefits, right? What are the benefits given by the partnership to the partners? What are the benefits they take from the partnership, right? In this scenario, what are the benefits? How are we going to distribute this taxable income? What are the benefits they get? Yes. Again, I'm saying don't send me direct messages. That would be, your answers are beneficial to others as well, right? That's right. Yes. Benefits. One benefit is the salary. Partners are getting salaries from the partnership. One is salary. It's given in the question, right? One is salary. And the other one is profit share. Salaries and profit share. There can be other benefits as well in a question, but here salaries and profit share. So we will write the salaries first. Salaries. Salaries. So what are the salary amounts they get? 360,000, 240 and 240. So I'm writing under Avantha 360,000, 240 and 240. First you write it here. So I'm taking the total as well. 840. That is correct, right? It's given in the question. 840. Now what? Now we are distributing this taxable income. Distribution of taxable income. What is the total of taxable income of this partnership? 2.9 million, right? We have calculated 2.9 million. So we are distributing this 2.9 million taxable income among the partners. One is given. So one way of distributing your taxable income to partners is partner salaries. One way of distributing your taxable income among partners is salaries. So we have considered total is 840,000. Now what is the balance? Can I have answers? What is the balance now? Balance taxable income. Now total taxable income is 2.9 million. 840 we have distributed as the salaries. Now what is the balance? We have to share the balance of balance profit, no, balance taxable income here. How much is the balance? Balance is, right, 2.9 million minus 840. Exactly. Correct answers. Yes. Balance is 2.2 million 60,000. That is the balance. So we had 2.9 million in total. Out of 2.9 million, we have distributed 840 as salaries. This is the balance. So balance taxable income. Right. Now we have distribute this balance taxable income among the partners. Now what is the ratio? What is the profit sharing ratio? 2 to 1 to 1, right? It's given in the question. So we'll write it here 2 to 1 to 1, right? For our reference. So we'll distribute. I will take this divided by 4 because 2 plus 1 plus 1, 4 multiplied by 2. Basically half, right? 1,030,000. Here, this total amount divided by 4 multiplied by 1. You can just divide it by 4 as well. 515. It's the same amount for Patirana because 2 to 1 to 1. So this is how we distribute the balanced taxable income. Just take the totals and see. Now what is the, you have to take the totals like here. Avanta's total, profit share and the salaries. Nihal's total, Patirana's total. It's the same because the same ratio. And the total is 2.9 million. See, our taxable income is 2.9 million. We have distributed the same taxable income among the partners, right? So do you have any doubts here? Are you clear up to this point? So this is how you distribute the taxable income after calculating. Yes. Okay, now we have another important thing to do, right? What is that? Sorry. Right. Now, the other important things we have to do is we have to distribute this income tax liability we calculated. Partnership income tax liability. Now, we have calculated partnership income tax as 114,000. Now, if you can remember, you have learned those income taxes paid by a partnership. Income taxes paid by a partnership can be claimed by the partners as tax credits when they are calculating their individual taxation. Again, I'm saying the income tax payable, income tax, partnership income tax paid by a partnership, right? When the taxes has been paid by a partnership, those amounts can be claimed by the partners as tax credits when they are calculating their individual taxation. So here, when Avanta, Nihal and Patirana calculate their individual taxation, they can claim part of this income tax liability paid, partnership income tax liability paid as tax credit. So we have to calculate those amounts. How much Mr. Avanta can claim as tax credit? How much Mr. Nihal can claim? Right. So take tax credits. tax credits. So this is for our reference, right? This is for our future reference because we have to know what is the tax credit of Mr. Avantha when we are calculating his income tax computation. So what is the total again? 114,000. 114,000. So again, we can use the same ratio 2 to 1 to 1 to calculate those shares. Divided by 4 multiplied by 2, 57,000. Here, 114,000 divided by 4. Again, the same amount. See, the total of these amounts equals to 114,000. So these are the tax credits that can be claimed by individual partners when they are calculating their individual tax computation. So you will see how we are claiming Mr. Avantha's tax credit, right? There's one condition as well to claim those partnership income taxes. Those should have been paid. First of all, you need to pay. The partnership need to pay the partnership tax. If that tax has been paid in cash, then you can claim it as tax credits. That is one condition. That's why in this question, it is clearly mentioning partnership has paid the relevant tax amount to the government calculated on the divisible profit during the year. So now I hope you get the point why we have given this sentence, because of this one, because the partnership has paid it already, you can claim those paid amounts as tax credits, right? Anyway, you have learned that point. Okay, so that's all about the partnership taxation. We have calculated it and we have shown the distribution part as well. Are you clear about the partnership taxation? This part? Right. Okay, so we are moving to the second part, right? Now the first requirement is done. Now the second requirement, what is that? If you go to the question again, the second requirement is calculate the balance income tax liability of Mr. Avantha. Balance income tax liability of Mr. Avantha. So individual taxation part. So I copied it. You can also write balance income tax liability of Mr. Avantha for the year of assessment 2023 to 24. Right. Here also the same. You can use two columns. Right. Right. Okay. Now here also, okay, I have a question. If it is not paid to the government, can't we deduct as tax credit in individual taxation? Yes. Give me a second. Right. So, Uday sir, just correct me sir if I'm wrong. To claim partnership taxes as tax credits, it should be paid. Am I correct,
Yes,
sir?
yes, very correct. But there could be a timing difference sometime. Timing difference in the sense the fourth quarter partnership tax payment would delay, and also the individuals the last payment would be delayed. But when the annual returns are submitted, it has to be settled. Otherwise, it cannot be claimed.
Yes. Okay. So, I hope your clarification is clear now. Okay, so we'll calculate, thank you, sir. We'll calculate this balance income tax of Mr. Avantha, individual taxation. Now, here also, we have to take the income sources separately. As you correctly said, employment income, investment income, employment income, business income, investment income, and other income. Usually, we take that order. So I'll write the employment income. Since this is an employee, Mr. Avanta is an employee, he has employment income. Employment income, first part. Right. So we'll see what are the things coming under employment income. So from the beginning itself, it starts the information, basic salary, entertainment allowance, telephone allowance. Those are the benefits, right? Others are EPF 8% deducted, payment for the house 120,000. Okay. Now here we'll start with the basic salary. You have to take the gross basic salary here. Before deducting any EPF or anything, gross salary. Right, that is, how much is that? 3 million. Again, I'm taking rupees. 3 million. Right, basic salary. And then we have the entertainment allowance. What is that amount? 240,000. I'm taking these figures to the first column, right? Not the second column. I'll be using the second column for the computations, right? 240,000. You also can do the same thing. 240,000. And then we have the telephone allowance. Telephone allowance. Now, what is the amount we can claim? Now here telephone allowance, it says 40,000 is the expense of Mr. Avanta for the whole year, of which 30,000 was paid by the company. Now what is the benefit? Even though the expense is 40,000, company has reimbursed only 30,000 rupees. Now what is the benefit? Can I have answers? What is the benefit? 40,000 is the expense. 30,000 has been reimbursed by the company. Exactly. Now, company has reimbursed 30,000. That is a benefit, of course, right? We are getting a benefit. Our telephone expense has been reimbursed by the company. But as for the taxation, you can claim only 50% of the reimbursement as a benefit. Right? Taxable benefit is 50% of this 30,000. 50% of this 30,000 means 15,000. Your answers are correct. 15,000. So you can mention it. If you want it, you can mention 50%. Okay, that is telephone allowance. Next point. So I have taken basic salary, entertainment allowance, telephone. So I'll be marking them. And these are information purpose, right? EPF and ETF, and then telephone expense as well. Right, the next point is bonus received. So as you can see, there are two bonuses, 140 and 350,000. The first bonus has been, that is out of the profit of the previous year, 2022-23. We are in 23-24, right? Previous year, but has been received in April 2023. Is it in this year of assessment or not? April 2023 means in this year of assessment or not? Our year of assessment is 2023-24. Yes, it is in this year of assessment. Now, when we are taking the benefit bonuses, what is the basis you use? We are using the cash basis, right? We have received these bonuses on this year of assessment, that is on cash basis, so you can consider that. We'll take it first. Bonuses. Received in April 2023. That amount is 140,000. What about the second bonus? Second bonus, that is out of the profit of this year, right? 350,000, but it has been received in April 2024. That means the next year of assessment. So we have not received it during the year of assessment on cash basis. So do we consider this? Do we consider this second bonus as a taxable benefit? No, we are not considering it as a taxable benefit because it's not received in this year of assessment. So we are not taking it. So we are taking only this 140,000, as you can see. Right. So this is also done. Next one, Mr. Avanta has been provided 1500cc motor car for both official and private use with unlimited fuel by the company. Now, can I have the answers? What is the vehicle benefit? We have to consider. What is the vehicle benefit? Can I have answers? Right. So, for your reference, now I have opened the non-cash benefits PDF we have shared with you. Clearly, it is mentioning, right? Vehicle benefits. It says any vehicle and the amount, the taxable benefit amount for monthly. Monthly taxable benefit is given. Vehicle 20,000, driver 10,000, fuel 20,000. Now, can I know the answer? Taxable vehicle benefit for 1 month. Taxable vehicle benefit for 1 month. Now, in this question, Mr. Avanta has been given the vehicle with unlimited fuel by the company. We have unlimited fuel by the company. Exactly. These benefits are for 1 month. These benefits are for 1 month. Yes, I'm getting correct answers. Now, the vehicle amount, if you are getting only the vehicle, monthly 20,000, it is the benefit. If you have a driver also given, you have to add another 10,000. If you have fuel, unlimited fuel given by the company, then you need to take 20,000, additional 20,000. So in this question, you have the vehicle plus unlimited fuel. That means 20,000 plus 20,000, altogether 40,000 per month, right? That is how you take it using the table. Now here it says the CC, engine capacity of motor car. Now previously, last year also we had those things because we were deciding the vehicle benefit based on the engine capacity of the vehicles. If it is 1500cc, if it is 2500cc, a different benefit. Likewise. Now we don't have to consider, we don't have to worry about the engine capacity. That means CC, we are talking about any vehicle. Any vehicle, you can apply that table. Right. So, vehicle benefit. Monthly, 40,000. 20,000 plus 20,000, right? Vehicle and the fuel multiplied by 12. For the whole year, 12. The benefit is 480,000. You can correct me if I'm doing any mistakes with the numbers. 480,000. That is the benefit. Right. I hope that's clear. That point is also done. Number 6. Mr. Avanta has incurred a maintenance expense of 150,000 on 15 March 2023. Is it in this year of assessment? No, right? Our year of assessment starts on 1st April 2023. So before this year, he has incurred this maintenance expense for his personal vehicle, for this vehicle, the company has reimbursed 50% of this maintenance expense on 15 April 2023. Even though Mr. Avantha has incurred his maintenance expense on before year of assessment, he has reimbursed 50% of it. That means 75,000 rupees in this year of assessment. What do you think? How much we have to consider as taxable benefit? How much we have to consider as taxable benefit here? Now we have reimbursed the maintenance expense 75,000 in this year of assessment, right? We have received that benefit here. So yes, you can take directly 75%. 50% of 150,000, 75,000. Vehicle reimbursement. Vehicle maintenance reimbursement. That is 50%. That is 75,000. Right. That is also done. That is the first point, right? First point. And it says, the second part, this vehicle is owned by Mr. Avantha and it has been rented out to a cab service company for a monthly rent of 200,000 for the whole year of assessment. Now, his own vehicle for the whole year of assessment, he has rented out, right? Monthly, he is taking 200,000 rent income for that, from that. Now, this is, can you consider this benefit under employment income? Are you getting that benefit as part of your employment? No, right? This is not a part of, yes. Thank you. Yes, no. We have not, we should not consider this as an employment income. So this benefit, we are not considering it under employment income. You can consider this rent income, vehicle rent income under investment income, right? That is, in practice, we are considering those similar types of similar types of rental incomes in investment income. If you take it under other income also, that's okay. But practically, in practice, we are taking it as investment income. So we'll mark it, right? We'll mark it. For now, we have to consider this when we are writing the investment income. And the next point, point 7, the company has provided a residence to Mr. Avantha. The residence is located in Colombo 7. That is a rated area. You need to know whether it is in rated or unrated area, which is newly constructed and fully furnished. And Avantha paid 10,000 rupees monthly to the company for this benefit. Company has given a residence in a rated area. That is a benefit, employment benefit, a non-cash benefit. But monthly, Mr. Avantha is paying 10,000 rupees to the company for that benefit. Right. So again, I'm going to the non-cash benefit sheet. Right. This is where you talk about value of benefits from any residence. Here, as per this table, there are 3 columns now, in rated area, in unrated area, estate bungalows. So our relevant column is this one, right? The second column, in rated area, because our house is in Colombo 7. What is the benefit? 12.5% of the salary of the respective employee for the relevant month. 12.5% of the salary. Now, you have discussed this point, right? When you say salary, what is the salary we are using? When you say salary, what is the salary you are using? Can I have answers? What is the salary we have to use? You have discussed those points. Now, these are the salaries. What is the salary we have to use? This net salary, gross salary, or this basic salary, or what? Yes, correct. Usually, remember, we have to take salary for EPF. Salary used for EPF calculation. Now, here, in this point, it says EPF and ETF calculated on which base, which salary base? On basic salary, right? So EPF has been calculated on basic salary. That is the salary we have to consider to take 12.5%. Are you clear? Right? So this basic salary, that is annual, right? This is not monthly, annually 3 million rupees. That is the salary we have to consider here, right? Your answers are correct. We'll write it as value of benefit from residence. Right, 12.5% of what is the basic salary now? Now you don't have to consider monthly salary now. Anyway, throughout the year, for the whole year of assessment, this benefit is there. So you can directly take 3 million rupees. 3 million rupees. Right. Now what is that amount? 3 million into 12.5%. That is 375 rupees, right? 375,000. But now that is the benefit. That is correct. That is the benefit from the residents. But you can't directly take this benefit. Why? It says Avanta is paying 10,000 rupees to the company. Even though he is getting the benefit, he is incurring some amount. He is paying some amount to the company. So whole 375,000 is not the benefit. He is giving something back, right? Reimbursing. So Avanta is paying how much? Avanta is paying for the whole year. How much? Monthly he is paying 10,000 rupees, right? Avanta paid 10,000 monthly to the company. That means multiplied by 12, 120,000. Avanta is paying 120,000 for the whole year. Then what is the benefit? Benefit is 255,000, not 375,000, 255,000. Right. I hope that's clear. If you have any doubts, you can ask. That is also taken. Point number 8. The company has allotted 2,000 shares to Mr. Avanta under an employee share option scheme on this date. In this regard, Mr. Avanta paid 50 rupees per share at the allotment. Right. 50 rupees per share at the allotment. Give me a second. Right, thank you. Right. So share allotment, 50 rupees per share at the allotment, and then at that date, market price of the share is 75 rupees. So even though the market price is 75 rupees, Mr. Avanta has paid only 50 rupees. So there's a benefit, right? 25 rupees per share, there's a benefit. So how many shares the company has allotted? 2,000 shares. Now, Uday sir, are you here?
Hello.
Yes, sir. Sir, this allotment should be in the year of assessment, right, sir?
Yes, correct.
Yeah. So the date is 1st January 2023.
It has to be altered, no?
Yeah. So
Yes,
I'll take it as 2024 January 1st.
Yes.
Yes.
Good.
So Ramai, you can make this correction, right? In order to be considered in this year of assessment, this share allotment should happen during this year of assessment, right? Okay. So that's
Also,
why.
highlight that in green color, like for
Okay,
them.
sir.
Green.
Yeah. So if it is on 2023 January 1st, we don't have to consider that benefit, right? That is in previous year. Now we have to consider this one because in 2024 January 1st. Because of that reason, we have to consider this benefit. Right. Share allotment benefit. So the market value per share is 75 rupees, but Avanta paid only 50 rupees. There's a benefit. Benefit is 25 rupees. How many shares we have? 2000 shares we have. So the benefit is 2000 shares multiplied by 25 rupees, 50,000 rupees. Okay. This is how we calculate that. All right. And then it says, I'll keep this number 8 point highlighted like this, so you can make the changes. And then air ticket cost of 650,000 has been reimbursed by the company in March 2024 during this year of assessment. On foreign visits made by Mr. Avanta to meet a business partner of the company in Australia. Now, Mr. Avanta has gone on a business trip for business purpose. For that, I think he has incurred 650,000 rupees for the air tickets. So, Mr. Avanta has reimbursed that amount from the company. Is this a taxable benefit? What do you think? Is this a benefit? Is this a taxable? No, this is not a taxable benefit, right? This is like Mr. Avanti is reimbursing his amount spent for the company for their business trip. So you can write. So even though there's no benefit, remember when you are answering questions in the exam, write that benefit. Air ticket benefit, it's 0. For this, you are getting marks, right? Mention it that there is no benefit. So for that, you are getting marks. Remember those small points. Right, that is also done. And then during March 2024, Mr. Avanta's wife was hospitalized for 2 weeks. Write that hospital bill. Hospital bill was 145,000, but the company settled 100,000. So clearly your benefit is 100,000, right? Medical bills. Medical bills reimbursement. Since the company has reimbursed only 100,000, your benefit is 100,000. Right, that is also done. So after that, you come to this partnership part. You have completed that. I can highlight it as well. And we have these points only, the balance points. So balance, it says we have already read these points. This rental income of his own house and this interest income and then these 2 donations and the self-assessment payment. So as you can see now, we have considered all the employment income things, right? All employment income we have considered. So because of that, now you can take the total of employment income. Total of employment income. You add all these points. Right. Check whether you got 4.355 million. 4,355,000. This is the total employment income. You take the total like this. Right. So are you clear up to now? Do you have any doubts? Right. So I'm going for the second income source, which is you can take business income or investment income. I'll take business income. Now tell me, Mr. Avanta's business income. Mr. Avanta's business income. What is that? What is that amount? Business income of Mr. Avanta. So as you can see, As we have computed, Mr. Avantha is engaged in this partnership. It's a business. What is the income getting from this partnership? What is the business income of Mr. Avantha? What do you think? Yes, exactly. Now, here, if you go up, after computing the taxable income of the partnership, you have distributed the income among the partners. Now, if you take Mr. Avantha, he is our focus now. Mr. Avantha, he has received from the partnership 360,000 salary and this balance share of profit. So altogether, he has received 1.39 million business income. This is his business income, right? We have to take that. Business income from the partnership. There's no any other business, no? Right? We can take it directly to the second column. There's no other benefit. 1.39 million. Right. I hope that's clear. You don't have to do any other computation for that. And then we don't have any other business income. That's it. And then we can move to the next. Number 3. Next income source is investment income. Investment income. Right. First, investment income. Now, can you remember, before going to these latter part points, can you remember we highlighted one point, this point. Mr. Avantha has his own vehicle. His vehicle has been given to this cab service company on rent. And monthly he is receiving 200,000 from the cab service company. That is kind of a vehicle rent income. So I told you, in practice, we are considering those kind of rental income in investment income, right? So we'll put that first. Vehicle rent. Vehicle rent. Monthly, you are getting 200,000 multiplied by 12. That is 2.4 million. 2.4 million. And then, what are the other investment income we have? Yes, you can go down. The first one, Mr. Avantha has rented his own house. Okay, he has rented his own house and received a rental income of this amount. You told me now this is gross rent income, right? Why? Mr. Avantha has not given consent to deduct any AIT. So you can take it 840,000. That is the rental income. That is not monthly rental income for the whole year of assessment, 840,000. So you can directly take house rental, 840,000. You have to take the gross amounts here. Okay, that point is also done, but there's one part, right? Up to this point, we are okay. It says during the year, he has incurred 200,000 for repair work of this house. We will need that information later, but for now, we are considering the gross rental income. And then interest income received by Mr. Avantha to his bank account for the whole year is 78,960. That is gross or net. That is net of AIT. AIT has been deducted, WHT deducted. So he has given the consent to his bank to deduct AIT at the rate of 6%. So why in this question that AIT rate, WHT rate is given? Because we need to consider the gross interest income, not the net interest income, gross one. So we'll write interest income, 78,960. 78,960. How can we convert this net interest income to gross interest income? The 78,960 equals to 94% because 6% WHT has been deducted. To convert it to gross, divided by 94 multiplied by 100. We'll see whether your answer is correct. Okay. So 78,960 divided by 94 multiplied by 100. 84,000. Can somebody confirm whether the answer is correct? There's a slight change with your answer. Is it 84,000? Yes, thank you. 84,000. So you are taking the gross, remember. Okay, so do we have any other interest income? Now we have taken this point fully. The balance points, that is donations and then self-assessment. Yes, right. We have considered all investment income. So you can take the total. What is the total? Is it 3,324,000? Total investment income. Right. Right. So we have considered the employment income, investment income, and business income. We don't have any other income in this question. So you can take the totals now, right? Investment income, business income, employment income. Check whether you get these answers. 9,069,000. What do you call this? Total assessable income. The total of all those four sources, total assessable income, this amount. Right. So we have calculated the assessable income. All right. Now what? What is next? Now we have deduct the qualifying payments, if any. Qualifying payments. Do we have qualifying payments? Yes, of course. We have qualifying payments, right? Right. Go to the question and see. Yes. Now here, Mr. Avanta has donated 150,000 in cash to Ministry of Education during the year. That's a donation to Ministry of Education means what? Donation to government. Donation to government. How are we going to adjust government donations? Now, this is the PDF we have shared with you. This I explained for qualifying payments. So as you can see, there are part A, it says donations made by an individual or entity in money to an approved charity, approved charitable institution. And if you go to part B, a donation made by an individual or entity in money or otherwise. It should not be necessarily money. It can be goods as well, money or otherwise, to the following. Coming under that, Government of Sri Lanka. Ministry of Education means government to the Sri Lanka, and it separately says. So it's, how can we adjust it? All donations made to above, part B, that means part B, these things, right, shall be claimed up to the assessable income or the actual donation, whichever is lower. Now, if you go back, what is the qualifying donations? First of all, you can write donations to Ministry of Education. Donations to Ministry of Education. That total amount is 150,000. 150,000. Right. Now, what is the condition? Donations shall be claimed up to assessable income or actual donations, whichever is lower. Assessable income means this amount, 9 million something. What is the actual amount? 150,000. What is the lower value? Whichever is lower means lowest value is actual donation, 150,000. You can claim it. 150,000. Lowest value is 150,000. So when you have donations coming under B category, right? This part, we have to apply that theory. Assessable income, actual donation, whichever is lower, you can deduct. Second donation. What is the second donation we have? Now this is done. He has also donated rupees 80,000 and medicines of 20,000. Now if you can see here, now part A, it talks about donations made by an individual entity in money, red highlighted in money, to an approved charity. So when you are making donations to approved charity to be claimed, it should be in money, not in goods. So in this point, 20,000 worth of medicines you can't consider. It's not a qualifying payment. You can't claim. Only 80,000 rupees in money you can claim. So we'll write it first. Donations to approved charity. In cash. Cash only. We are taking only the cash payment. That is 8,000 rupees. 8,000 rupees. Now we'll consider what is the condition. Now it says this is how you claim it, subject to maximum of, in the case of an individual. Now there are two things. In the case of an individual and in the case of an entity. So in the case of an individual, 1/3 of the assessable income. 1/3 of the assessable income of the individual or 75,000 rupees, whichever is lower. Whichever is lower. 1/3 of the assessable income. Take 1/3 of the assessable income. I'm just taking. Assessable income is this amount. 1/3 means divided by 3. 1/3 of the assessable income. And what is the lower level? Direct 75,000. 75,000. Whichever is lower. So 700, not 750. 75,000. 75,000, whichever is lower. Now what is the lower value? 75,000. This is the lower value. So you can claim only 75,000. Doesn't matter your actual donation is 80,000, 90,000 or 100,000. Even though your actual donation in cash is 80,000, you can claim only 75,000, whichever is lower. Right. So those are the qualifying payments we have. So we can take the total.
Now that
Right.
is
Oh, sir.
1/2 of the 1/3 කියන එක typing.
Yes. Sorry, sir. Mistake, my bad. 1/3 of the assessable income. Right. So these are the donations. And then we can deduct what? What is next? We can deduct the reliefs. Reliefs. So what is the relief? We can have the personal relief, because this is a employee. Istavanta, personal relief, individual. What is the personal relief we can deduct? Can I have answers? What is the personal relief? So after deducting the qualifying payments, you can deduct your personal relief. What is that amount? Yes, 1.2 million. Monthly, 100,000 multiplied by 12, 1.2 million. You can deduct 1.2 million. Personal relief, 1.2 million, you can deduct. And then what? We have another relief here. What is that? Rental relief, rent relief. We have another relief, rent relief. Now, you have here, I'll go to that point. In this question, you have this one, house rental, no, right? You have this house rental. For that, you consider total 840,000 as the benefit, residence rental benefit. Now here, even though you are giving it on rent, even though you are earning rent, for depreciation, maintenance and other stuff, you might be incurring some expenses, right? Even though you are renting it out, you might be incurring some expenses. For that, you can claim rent relief. What is that rent relief? What is that percentage? 25% of the rent income. 25% of the rent income you can claim. So we'll compute it. Rent relief, 25%. What is your rental income for the whole year? 840,000. That is 840,000. So what is that actual amount? 840,000 multiplied by 25% means 210,000. 210,000. Now, the part we missed here. During the year, he has incurred 200,000 for repair work of this house. Now, as you compute 25% of the rent income, you get 210,000. It's like you can deduct 210,000 as the rent relief. But your actual expense you have incurred is 200,000. So you might be thinking you can deduct only 200,000 because you have actually incurred 200,000. But it's not the case. For tax payer purpose, right, from your side, you can deduct total 210,000. That is the 25% of the your rental income, not 200,000. So you can claim total 210,000 here. I hope that is clear. Even though your expense is 200,000, you can claim 210,000, 25% of the rental. Okay, so that is, we have personal relief 1.2 million, rent relief 210,000. Now we can take, we don't have any other reliefs here, right? That is a total. Now you can take the total assessable income minus the qualifying payments minus the personal relief and the rent relief. You have 7,434,000 as what? You call this taxable income. Taxable income. Okay, right. Okay, so this is a taxable income, 7.4 million average. How we got personal relief? Now, here, like this, 100,000 multiplied by 12, 1.2. For the whole year, we can claim 1.2 million. Monthly 100,000, we have 12 months. 100,000 multiplied by 12 months, 1.2 million. That is how we got personal relief. I hope that's clear now. Right. I'll answer that next question later after doing this computation. Why can't we get the share selling income, or someone is asking, can we get capital gain on shares as an investment income? We'll discuss that later. Right. Okay, so the personal relief, I think that's okay. Rent relief, and then we have the taxable income. Now we can calculate the income tax liability, the taxes to be paid. Right. Income tax liability. Right. How can we compute? Now we have to know the rates and the slabs. Rates and the slabs. So I'm taking the first slab. What is the first slab? 500,000. First 500,000. What is the tax rate? 6%. Starting with 6%. And then I'm writing the next slab. Next 500,000. What is the tax rate? Income tax rate? 12%. So likewise, I can write. So taxable income is somewhere around 7 million. So by looking at the number, I can guess there can be so many slabs, right? The full slabs. Still it's 1 million. No? So next step goes, so we have to take 500,000. That is 18%. And then the next slab, it's 24%. Next, 500,000, it's 30%. So we'll see. Now we have only one slab left, that is the balance. We'll see the total. Still we have taken how much? We have taken still 2.5 million. We have 7.4 million taxable income. So the last slab is balance. Balance, you can take the total balance. So you take 500,000 slabs and the balance is sorry about it. Okay, so the balance is 4.4,934,000. That is the balance. What is the tax rate? For balance slab, you can apply 36%. Those are the tax rates you can use. So just a matter of multiplying 500,000 by 6%. Likewise, you can multiply the rates, taxes. Right. Okay, so you can see what is the total income tax payable? 30,000, 60,000, 90,000, 120,000, 150,000, 1,776,240. If you have any different answers, just let me know, right? Okay. So this is the tax amount. I'm taking the total to this side. The total income tax liability payable is 2,226,240. That is income tax liability. And then you can, this is better if you can show it separately, right? Income tax payable. It is better if you can show it separately as payable. Income tax liability or payable. Right. So after computing the taxable income, you applied the tax rates for different slabs, and then you took the income tax payable. Now the last part, you can deduct the tax credits. You can deduct the tax credits. Can deduct. So what are the tax credits available for us? The first tax credit. Now this one is also okay, right? These points are done. The first tax credit, self-assessment payment, income tax payment of Mr. Avantha on self-assessment basis during this year of assessment. So 427,000 Mr. Avantha has paid on self-assessment basis. Okay, your answers are correct. Yes. So the self-assessment paid. I'm taking that first. 427,000 he has paid quarterly on self-assessment basis. We have another one. We have two other tax credits. Can I know what are those two? One thing we have discussed. Exactly. Partnership tax credit. Now, can you remember when we were doing this partnership taxation, we showed in this working tax credits available. I told you when there is partnership taxes, when it is paid, we can claim those amounts when we are calculating the income tax, individual income tax liability. So in the partnership, they have paid 114,000 partnership income tax. So we have divided those 114,000 among the partners. So Mr. Avanta's portion is 57,000. You can claim this 57,000 under tax credits. 57,000. This is partnership tax. Partnership tax paid. Right, that is the second one. We have another one here. What is that? We have another one. Now, can you remember in the interest income, the bank has deducted AIT, WHT at the rate of 6%. Exactly, your answers are correct. At the rate of 6%, the bank has deducted WHT. Now we can take this one, right? We can take the amount deducted by the bank as the tax credit. We have already paid. So 78,960. That is the net amount, right? If you want, we can have the gross amount as well. We have calculated it. What is the gross interest income? 84,000, right? 84,000 multiplied by 6%, 5,040, right? That amount, we can take it here. So here, AIT on interest, already we have paid, already bank has deducted. Our gross interest rate is, yes, gross interest rate is 84,000 multiplied by 6%. Rate is given in the question, 5,040. If not, you can directly take it from like 78,960. That is the net interest income. Gross interest income is how much? 84,000. The difference is the WHT pay. Different ways are there to calculate it. Right. So apparently these are the tax credits we have. Right. We have considered all those tax credits. I'm taking it to this side. The total 489,040. Those are the total tax credits. Now we can have the income tax payable, this amount. From that, tax credits can be deducted. We have 1,737,200 that you call balance income tax payable. Balance income tax payable. This amount we have to pay 1.7 million, 1,737,200. Okay, so this is how you usually work out these kind of a question. So we went through the question, we identified the requirements, we calculate the partnership taxation, right? And we did these workings here because we need those information in the future when we are calculating the individual income tax. This part, right? This part we did for working. And then we went with the employment income. One by one, we took the amounts. We took the employment income total. And then business income, we directly took from that working. And then investment income, one by one we took. And then we took the assessable income. And then qualifying payments, we deducted. And then we deducted the reliefs. Someone is asking again how we took the personal relief. Monthly 100,000 multiplied by 12 months, that is 1.2 million. You can deduct it, right? And then after deducting the reliefs and the qualifying payments from the assessable income, we have the taxable income, and then we can calculate the income tax liability like this, income tax payable. After that, we deduct the tax credits. Then we have the balance income tax payable. So this is how you usually work this out. Right. Uday sir, we have one question asking,
Yes.
why didn't we take the capital gain on shares like this here? Under share allotment, sir.
What is the date of
Yeah, sir.
disposal?
Date is, they have a share allotment date is 2024 January 1st. He
Yes.
sold all these shares at 90 rupees per share on 20th March 2024.
If that is the case, this date may be incorrect sometimes, the earlier date also incorrect. No?
Yes, sir, that's the
We
case.
got it adjusted.
Yeah.
Really, we don't want to make this complex. So I suggest Nadasamis will alter this date also. I'll explain this. In order to match with the answer, in order to maintain the accuracy of the answer, we'll alter this date into 20th, not March. We'll alter that into May or something like that.
Yes, sir, yes. After the
That also will alter. Shade in green color, I'll explain
Yes.
it.
Done,
So in
sir.
this situation, in the next year of assessment, the capital gain will be worked out. Capital gain. That is the disposal value minus the acquisition cost will be a capital gain to this particular individual in the next year of assessment. That is year 2024 and 25. All right.
All right. I hope that's clear. That's the reason. This is not in the year of assessment. Next year you can take it. Okay. So I hope, do you have any other questions? If you have any other questions, I hope that personal relief is clear now. Few of the students asked. Right. Just ask if you have any clarifications or doubts. You will get a similar questions in the exam as well. Yes. That capital gain is correct. Someone is asking that. Right. So I hope there are no questions. If you have, you can ask. Okay. So this is how we usually do. You can use the same format in the exam as well. And see all the workings are here. I didn't do any working outside this format. So you can also follow the same thing. Show all the workings here because if the final answer is incorrect, we are checking your workings as well. Make sure you show all the workings. So some are doing this question like you take a summary, employment income, and then you take a working number one and do the working number one somewhere else, and then you take the total. That way also you can do, but if you can work it out like this, it would be very clear. Both methods are correct, right? So as long as you are very clear, all right. Okay, so I hope there are no questions from this question. So yes, we have one question. So we have one question asking, if there
Yes.
is ETF by employee, we need to deduct it when calculating employment income.
No, ETF is paid additionally, no?
Yes.
ETF is not deducted and paid, no. It is
Yes.
not something like 8% of EPF. It is paid additionally. Additionally. That is 3%. Say if the salary is 100, 8% will be rupees 8 will be EPF and rupees 3 is in addition to this 100. The employer will pay 3 rupees 3. This will be taken into account when the terminal, say we under employment income, we also discuss termination benefits. When an employee get retired, at that point also we discuss this. So it will be taxed at the point of retirement of this particular individual. If that is given, for example, let's say here you are not provided this 3%. If that is given, it would be there somewhere there, but it is not deducted out of this 3,000. That 3% will be taken into account at the point of retirement as a retirement benefit.
Yes, I hope that's clear. Right.
Just ask whether that is clear to them.
Yes.
That is a terminal benefit.
Yes. Yeah, it's clear. Right. Okay. So I'll stop sharing the question and I'll directly go to the individual assignment. I'll quickly go through it, right, for your reference. Now we have uploaded all the individual assignment documents and the guidelines. Right. I hope. Can you see the screen now? Yes, right? Can somebody confirm? You can see the screen, right?
Can see screen.
Yes, thank you, sir. So this is the guideline. You can go through this guideline, but I'll just explain what to do. This individual assignment is all about filling return of income tax return of an individual, right? So here, we have uploaded all the documents to the LMS. We have uploaded this return of income template and the relevant schedules, right? All the schedules, there are 10 schedules. All schedules are in one folder. I have uploaded it. And then the T10 certificate. T10 certificate as well. So those are the documents. Income tax return template, 10 schedules, and the T10 certificates. Now you have to download all these documents and go through. But to calculate the income tax, now when you are filling the income tax return, you need to calculate it and fill it, right? So we have given the details, how to calculate this income tax. Not as a complex question we did now, but the details, relevant details are given. So what you have to do is, after downloading all these documents, so we have mentioned the steps to be followed. You can take printouts of these documents. You can take printouts, right? Taking printouts of all those documents uploaded is not necessary. You can take printouts of those essential documents, but you need to download and go through those schedules. The first one is the return of income that you need to take a printout, and then schedule 3, 5, 8, and 9, right? You can take printouts of these documents. And then you need to refer to an Excel sheet we have uploaded separately. We have uploaded an Excel sheet. There you can generate the data. Why? Individually, for each student separately, you have separate data sets, right? One person is getting only like a separate, a different data set, right? That's why you need to do it individually. So you can obtain your data set by inserting the CPM number. I'll show it. Now this is the Excel sheet we have uploaded. All these assignment guidelines are again mentioned here. So if you can go down, data set for computation, you can enter your CPM, right? Can someone say your CPM, please? I have the CPMs, right? 22586. I'll show you. You can go to this one, 22586. When you enter your CPM, your data will be appeared here. If you enter a different CPM, different data set will be appeared here. So you can read the question, right? There are only 7 points. Read this one and you can work out your income tax liability, and then you can fill the income tax return. Okay, so that is the task you have. So CPM wise, you can generate your data set. So after generating your data set, right, using your CPM, you need to fill the income tax return and the relevant schedules using blue color carbon pen. Don't use black color or any other color. Blue color carbon pen with your own handwriting. You need to fill this return and the schedules by yourself, right? And after filling out this return and the schedules, you can scan it, right? You can scan it as a PDF and you can upload to LMS. I have given the submission link as well. So when you are uploading the PDF, make sure you write your CPM number on the top left corner of the income tax return, because we don't have any other number. No, you need to write the CPM number on the top left corner of the income tax return, maybe on the schedules as well, and then take it as one PDF, right? Merge all PDF together as one PDF you can upload. And when you are uploading, please rename your PDF with your CPM number, right? If not, we can't give you marks. What is the deadline? Deadline to do this upload is 11th June 2024, or no before 11:59 p.m. And that is the soft copy submission. And once this academic strike is over, 2 weeks study leave is over, we are meeting for 1 or 2 weeks again, right? So at that time, we'll inform you the exact date. At that time, you need to submit the hard copies, right? You need to submit the hard copies. No need to bind or do anything, just apply it and you can submit. So those are the things you need to do. So make sure you download all documents, go through them, and we have mentioned the required documents as well to be filled. So these are the these documents you need to take printouts, not only downloading, and then using the T10 certificate and the Excel sheet. With those information, you can fill the tax return, income tax return and the schedules. Make sure you refer to T10 certificate as well. That is also uploaded to LMS. Right, so that is all about your individual assignment. If you have any issues, any concerns, just you can ask. That those are the guidelines. All these are available in the LMS. Any issues? Any clarifications? It seems that there are no issues or clarifications. So I hope you all will meet the deadline. So individually, you need to do this with your own handwriting. You can't copy other data sets. If so, that's incorrect. You need to enter your CPM number, get your own data set, fill it individually with your handwriting and submit, right? Okay. So if you have no any other questions, we can wind up the session. Uday sir?
Yes, miss. And also we'll let them know that during the study period also we may take one other class.
Yes.
Oh.
So the next week or during your study leave, you have 2 weeks of study leave. We will be doing a similar practice question of company taxation, no sir?
Yes. Yes.
Yes. We will do an online session like this. So it would be definitely beneficial for you to sit for the final exam. So we can have that session. Right. So with that note, we can wind up today's session. I hope the discussed question is clear, and please submit your answers to the LMS link on time, meet the deadline, and yeah, that's it. Those are the things you need to do. Right. So thank you, everyone. Thank you, there, sir. Thank you, Visuru sir, for joining. I hope you got your clarifications clear. So good night.
Good night.